What's up, everybody? It's Jared with Capture the Magic, and it's that time of year where we have the financial earnings reports when it comes to major companies. We had Comcast just a few days ago where they reported for the theme park segment that they had a 19% growth in revenue, mostly stemming from Epic Universe, and that was really reporting on Epic Universe after 1 month. And a lot of people have been looking forward to Disney's quarterly earnings report to see what they're reporting. And it wasn't a bad report by any means, but the investors have not responded well to it. It seems like the stock has gone down about 2% off of this. But we have an article here from Yahoo Finance. We're going to dive into what they talked about and what the outlook is for, especially when it comes to the theme parks here. So this is from Yahoo Finance, and they say Disney stock slides amid sharp decline in linear TV business as outlook fails to impress. And for those that are curious, this is going to be covering basically the spring time when it comes to Disney. So you've got April up until about June is what this earnings report is covering. So it's not covering the most recent months when it comes to the summer when you're talking about Disney here. So it says Disney reported fiscal third quarter earnings on Wednesday that beat expectations, driven by continued strength in its domestic parks business and a year-over-year swing to profitability in its streaming unit. Still, Disney stock closed down nearly 3% as a sharp decline in the company's linear TV segment raised investor concerns, and the company's outlook failed to impress markets. Disney raised its full-year profit forecast to $5.85 a share, up from its May forecast of $5.75 per share, but some Wall Street analysts said the outlook left more to be desired. Quote, the updated guide was not as good as the Bulls likely hoped, KeyBank analyst Brandon Nespel wrote in reaction, noting that while the quarter featured some bright spots, softer underlying results in parks and streaming could increase investor scrutiny ahead of Disney's fiscal 2026 guidance due next quarter. And I think a lot of the park stuff probably has something to do with, I think there's a lot of investor questions about what is this going to look like for the parks this summer, as we've been, it's been reported out there that Disney attendance in the theme parks has not been high this summer, and as well as they even cited some questions in the earnings call about increased competition. They didn't say it, but I think you're talking about Universal and Epic Universe. So I think there's some questions when it comes to that, and I think that's one of the reasons why some investors are a little bit hesitant, that they're not really liking the earnings call that much based off of some of the potential things that could happen in the next earnings call or what it looks like going forward. Now, the thing Disney did focus on, and the thing they announced just a few days before this earnings call, was their deal they struck with the NFL, where essentially Disney is giving the NFL 10% equity in ESPN. In return, they're going to get they acquired media assets including NFL Network, NFL Red Zone, and NFL Fantasy. So that's quite a big deal. I'm very curious what the other businesses that do cover or have NFL games think about this, but Disney is getting directly in bed with the NFL, and given that live sports is one of the last really vestiges of linear television that are still thriving, it does make a lot of sense for Disney to try and double down into that, which is clearly what they're doing here, as the other, linear TV side of things, ABC, regular cable, is continuing to fall off a bit. So I think that's one reason why they did this, as well as getting the rights to the NFL games, which is a very expensive thing every time the licensing agreements come up. So I think that's part of that. So alongside the sale of NFL Network, the league and ESPN have also agreed to a second deal under which the league will license certain NFL content and intellectual property to ESPN for use across NFL Network and related assets. Also, the NFL agreement comes ahead of another major rights deal unveiled this week. ESPN will become the exclusive U.S. streaming home of WWE premier live events, including WrestleMania and SummerSlam, beginning in 2026. This is a move seen as further strengthening the content lineup for its DTC service. The 5-year deal will cost ESPN an average of $325 million per year. Disney declined to confirm the financials when asked by Yahoo Finance. They go on to talk about legacy headwinds meet digital gains. Disney reported revenue of $23.65 billion for the quarter, roughly in line with analysts' expectations of $23.68 billion and up 2% from the same period last year. However, ongoing weaknesses in Disney's linear networks business weighed on the quarter. Revenue in the segment fell 15% year over year, while operating income dropped 28%. On the streaming front, Disney said it will merge its Disney Plus and Hulu platforms next year. This is not a surprise. This is something I've been saying that they were going to do eventually once they got the full rights to Hulu. So basically, Hulu is going to be going away and just becoming part of Disney Plus going into the future. Said, quote, "This will create an impressive package of entertainment pairing the highest caliber brands and franchises, great general entertainment, family programming, news, and industry-leading live sports content in a single app." Disney Plus added 1.8 million subscribers in the quarter, falling short of the 2.5 million analysts polled by Bloomberg had expected. Disney's direct-to-consumer segment, which includes Hulu and Disney Plus, posted a profit of $346 million compared to a $19 million loss a year ago. When it comes to that and what they've done with this, which is what everybody expected them to do, Hulu has been, it's one of the more established streaming services out there. It's been around as long as Netflix has been. So basically, once they acquired Hulu, brought it into Disney Plus, basically Hulu is really driving what is now they're considering just part of Disney Plus. So it's not really that Disney Plus itself has had a big turnaround. It's just that the fact that Hulu has been plugged into it, and that's really bumping things up. So they went from $19 million loss last year to a profit of $346 million, while also really cutting a lot of costs when it comes to Disney Plus. So there's still some question marks there in terms of growth, as the subscriber count hasn't really grown a whole lot. And Disney even said in this earnings call that they're no longer going to basically highlight subscriber numbers, as they're just focusing on revenue, which is an interesting move. So I think the fact that they're not wanting to showcase how many subscribers they have kind of shows you that they may feel that they've hit a little bit of a ceiling when it comes to Disney Plus, and really trying to focus on just the profits. Now that they have Hulu plugged into it, is kind of, at least my guess, as kind of what's going on there. And they say the theme parks power on. It says, meanwhile, the parks business continued to shine in the quarter, though analysts flagged potential headwinds ahead. Revenue of $9.9 billion beat expectations of $8.87 billion, with the company posting a 22% rise in operating income at its domestic parks. Walt Disney World delivered a record Q3 revenue, while broader gains were fueled by increased guest spending, higher hotel occupancy, and a rise in cruise volumes following the successful launch of the Disney Treasure late last year. On the earnings call, executives said bookings for the experiences segment are tracking about 6% higher so far in the current quarter, signaling continued strength across parks, cruises, and resorts. So still, attendance growth at domestic parks came in flat compared to last year, suggesting intensifying competition in key markets like Orlando, where NBC Universal's new Epic Universe theme park opened in May. So basically, when it comes to the parks, the attendance was flat, but they saw an increase in revenue, essentially due to price increases, which has been the game plan for Disney the past few years, which is getting more money from each guest coming in, higher per capita spending, basically, is how they say that. So I think one of the reasons you're seeing the stock slide a bit here, there are some things, obviously, that are some very good wins for Disney, but I think a lot of the investors do see potential headwinds when it comes to the theme parks, given that, again, we've seen a lot of the reports talk about this summer with the attendance at Disney World not looking great. And obviously, we talked about Comcast reporting a 19% revenue increase basically off of 1 month of Epic Universe being open. So it's going to be very interesting to see what that looks like in the next fiscal earnings report for Comcast, what a full quarter of Epic Universe being open looks like and what that does for the revenue numbers, and potentially how that affects Disney. So I think that's some of this here, and essentially kind of what was expected here. Again, Moffett-Nathanson had reported that they expected Disney kind of basically just flatline on the attendance, be kind of level, and we're kind of seeing that play out here. But Disney's strategy of, essentially raising prices, getting more spending out of each guest coming in, is continuing to work. Now, my main question I've had about this strategy for a long time is, it has been working in the short term, but with increased competition, does this strategy play out in the long term? I think there are some questions about that, because if they do see an attendance fall off and the revenue numbers are not there, they're kind of in a peculiar situation. Now, Disney didn't really mention Epic Universe. They did say that with increased competition in the Orlando area, that they were happy with the results from this earnings call, which was basically the 1 month of Epic Universe being open. So they did kind of mention Epic Universe, but not by name. But I think, again, the big question is going to be next quarter's earnings report, and how does that look, reflecting, again, what we've seen with the attendance this summer at Disney, seemingly being lower than usual, and seeing Epic Universe have a full quarter of whatever effect it is going to have on the market. I think a lot of people, investors, and everybody are going to be looking at that And that's going to tell us a lot about how this could look in the coming years, as well as just, how it looked this summer. And again, like I've said before, Epic Universe is the weakest it's ever going to be right now, as the park capacity isn't where they want it quite yet. The ride reliability is continuing to improve, but it's going to take a while for that to get where they want it to be. So if they do see a hit from Epic Universe already this summer, I think that could tell you that they could potentially see even more of an impact in the coming years from Epic Universe. While this one, I think, was a very strong one for Disney, there are some potential, bumps in the road for Disney, seeing how this next fiscal earnings report goes for them and really what that looks like compared to Universal and Comcast when it comes to the theme park side. I think a lot of investors are looking at that, again, just given how much the Disney parks make for the overall Disney company. And if there is a hit on their strongest segment, that is going to be something that investors are not going to like seeing. And it'd be very interesting if that does happen. I'm not saying it will happen, but if that does happen, what is Disney's response to this, as the things that they're currently building, in Animal Kingdom, Magic Kingdom, Hollywood Studios, those things are not going to be done for years. So if they are already having an issue with Epic Universe coming along and impacting their attendance, that could continue to impact their attendance for years to come until the things that they're building, get open. And then hopefully for Disney, they would bring people back into the parks under that scenario. But really, what would Disney do in the short term between now and then would be the big question. And I think that's maybe why you already saw them announce the launch bay closing down for that animation experience, as they could have been looking at the numbers for the attendance this summer and realizing we need some things here other than shows and parades. Because I've been saying the whole time, I never thought shows and parades were going to be enough to really move the needle on theme park attendance when you're dealing with your biggest competitor having a brand new theme park. And that may be something that Disney's realizing and looking at, turning over Launch Bay to the animation experience. But they could also look at other things in the parks that could have some, fairly similar types of turnarounds, as that one's going to take about a year to turn around. So they could look at some other areas of the other parks to do very similar things there to try and bump up the offerings that they have, and very likely run even more discounts in the coming years while they're currently building the things that they're going to build. So while this was a strong earnings call for Disney in many ways, some question marks when it comes to linear TV, but I do think investors are seeing some question marks and potential hiccups on the park side due to increased competition. And that's something that I've been talking about for months, is if this scenario is playing out where Universal and Epic Universe continue to see an increase, which with a brand new theme park, you would expect they probably would, with increased attendance and revenue. And Disney, even if they stay flat, which I think if Disney does stay flat, they're able to stay flat in this time period attendance-wise, that's actually a win for them. But if they stay flat or they see a slight decrease, obviously they're going to want to bolster up that stock price, make the investors happy, not make them nervous. What are some things Disney might do to really kind of alleviate that issue is a very interesting one. So a lot of question marks, I think, on the park side, even though this one did show a strong earnings. But the big change there is the fact that you do have a full quarter of Epic Universe being open and really getting our first picture into what a full quarter of Epic Universe's impact is, and not only what it does for Universal, but what does that look like as well for Disney during that time period as well. And when I talk about next, earnings report, how it potentially could be higher for Universal, and maybe Disney is seeing some attendance lag a bit. It's not just me speculating just out of nothing. You actually have some data to kind of point to the next earnings call here, as we do know this was actually released today, that Orange County sees a record tourism and tax collections. And it says Orange County is setting a new record for tourism, and officials say it's thanks in part to Central Florida's newest theme park. The county collected nearly $34 million in tourist development taxes last month, and government officials say it was thanks in part to Epic Universe and major summer events. And they say it was the highest June collections on record and a 10% increase from last year. A 10% increase from last year is not a small number. And if the government there is basically crediting that to Epic Universe, I mean, you can read between the lines there and probably assume that Universal and Epic Universe are going to continue to see an increase in their attendance and revenue. That could be something we're seeing playing out here. And also, given how Disney didn't really want to talk much about the parks during this earnings call, even though they saw a revenue bump, they could know that the numbers are not going to be looking great in the next earnings call, and kind of downplaying that and trying to play up a little bit more of their, the NFL deal and things like that. So obviously this is just 1 month in June, But the fact that the government there is crediting this to Epic Universe, I think, is a very telling sign. And, we'll wait and see. By the next earnings call, we'll know what the July numbers look like as well for Universal. And if those continue to go up, I think we can pretty much safe to say that Epic Universe is continuing to increase revenue and growth for Universal Studios. And the big question there is just going to be, what does it look like for Disney in this next earnings call? A lot of positives you could take away from this from Disney, but a lot of potential headwinds they could be facing upcoming. And I think that's what investors are looking at and why the stock is down a little bit today. But either way, that is going to be it, though, for this video. If you liked this video, please like it and subscribe to the channel, as we do lots of coverage here of Universal Studios, Epic Universe, Disney World, and pop culture. And let us know in the comments, what do you think about all this? And until next time, we will see you in the parks.